It's Thursday, the 27th of January 2022. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
All right, let's get into it. 5 stories in 5 minutes. Story number 1 today is a pretty big question, really. When is the Reserve Bank going to lift the official cash rate and trigger a jump in home lending rates? Could it actually be as soon as May, Sean?
Well, according to plenty of pretty good economists, including the teams at Commonwealth Bank and at AMP, it could well happen in the next couple of months. That's because inflation is more prevalent in the economy than authorities have forecast. We saw that in the official figures released on Tuesday by the Bureau of Statistics. Headline inflation's at 3.5%. Underlying inflation, that's what the Reserve Bank keeps an eye on, is at 2.6%. Why are we seeing it? Because global supply chain disruptions and material shortages, combined with rising freight costs and high demand, are pushing up costs, especially around housing, cars, fuel, haven't we noticed that one, furniture and audio-visual equipment. Now, the Reserve Bank reckons that these price rises are transitory. That argument is looking just a little bit shaky. Get another quarter, that'll be 3 months' time, another reading at these sorts of levels, and the Reserve Bank may have to do something about it. Bond market investors already think there'll be 2 interest rate rises this year.
There's so many questions about all of this, Sean, and that really leads us into story number 2 today. The debate, all the uncertainty is really affecting markets.
It sure is. The local market is off 8% so far this year, including 2.5% on Tuesday. The S&P ASX 200 is trading below 7,000 points. Now that's back to May 2021 levels. The banks have fallen back, with market leader Commonwealth Bank at $95 a share. Remember, it was more than $110 a share late last year. CSL, the number 2 company, is off 11%. Wesfarmers is down 13%. There is plenty of movement in stock prices. It's happening on Wall Street too, particularly among the tech stocks. Some of the big guys, Apple, Microsoft, Amazon, Tesla, Meta, Netflix, Nvidia, they have tumbled this year.
All right, story number 3. Sean, I look forward to the day when COVID does not rate a mention in our top 5 stories each day, because there are plenty of cases still, but there seems now to be a bit of a sense of optimism about the numbers.
That's right. Of course, return to school could trigger a spike. In fact, it probably will trigger a spike. But at least in New South Wales and Victoria, it appears that peak Omicron has passed. Victoria's COVID-19 commander, Jeroen Weimar, yesterday said he expected around 13,000 new infections a day in coming weeks. Remember, it was about 50,000 in early January. New South Wales reported 21,000 new cases yesterday, but authorities said the number of people in hospital had actually fallen. There were 13,600 cases in Queensland. Now, that's the first time in a couple of years that Queensland has done more than Victoria. The number of cases in that state is expected to peak in coming days. All in all, though, the news seems to be a bit more positive.
Now, story number 4 today, Sean. Towards the end of last year, we talked a lot about retailers and about how everyone was getting out and about now that lockdowns were lifting, plenty of money to spend, and it did seem like things were picking up. But there's been mixed news for retailers in recent weeks because the Omicron outbreak has really dented those recovery plans.
It sure has. This week, department store Myer said sales were up 12% in the 6 months to the end of January compared to a year earlier. Pretty good. Online sales are up 50%. Great. But, and it's a big but, Omicron has had a negative impact on trading since Christmas. Same deal at Accent Group. That one runs Hype, Platypus, Skechers, Glue and Athlete's Foot. All those shoe stores. Its CEO said customer traffic was soft in January and in the last week of December. Sales were below expectations. Homeware retailers Adairs, it warned its first half profit would be hurt by supply cost increases. What's all this mean for shareholders? Well, it's bad news. Myer share price is down 14% so far this year, notwithstanding a 7% rise on Tuesday. Accent is off 17% since December 21 and Adairs is off 26%.
Wow. Story number 5 today, Sean. Question for you. Are you a Bob Dylan fan?
You have to be a Bob Dylan fan, Michael. Surely you're a Bob Dylan fan.
Well, I do beg to differ on that one, but there is some very big Bob Dylan news around today. He has sold his entire catalogue of recorded music to Sony Group.
Yes, that's about 60 years worth of work. Now, we don't know how much he was paid, but it's estimated at around $200 million US. Now, about 18 months ago, Bob Dylan sold his songwriting catalogue to Universal Music Group. It's a trend, definitely. Remember last month, Bruce Springsteen sold his back catalogue in a deal worth around $500 million. Great to see these old rockers becoming rich.
Yeah, they certainly are. Bob Dylan is 80 years old. Did you know? That's a nice little payday when you turn 80 to pocket US $200 million. Not bad.
60 years of work, he's worth it.
Yeah, certainly. That's it, Sean. The top 5 business stories in 5 minutes. Thank you very much.
Thanks, Michael. Have a great day.
You too. It's Thursday, the 27th of January, 2022. Remember to hit follow on the podcast, and if 5 minutes isn't quite enough for you, then you can find our longer podcast called Fear and Greed on your podcast platform. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.